This is Justin AMZN on Tuesday, April 30th, 2019. We're at the end of the month. This morning we were opening pretty flat on from the close yesterday. Put a really strong hammer here, and kind of expectation maybe people are locking in some profits from the month and making those numbers work and not holding into next month. So there's some selling that comes in, that's fine. We come right back into 1925 right here, start to bounce. We got three bullish candles, inside candle here. Let me zoom in on the day here. Three bullish candles, inside candle here, and then that starts to break down. So this is kind of a nice little S curve here to be buying up, and you got a nice hammer here. The hammer's been working, higher highs, higher lows, and these candles on their way up. Then you get to this one, and it starts to reverse here, at least pulling back to the 1925. You got lower highs, relative lows, and we do have a squeeze that starts to form, and then that actually fires bearish on this candle here. But we made four bearish candles in a row, down, three up, six in a row, three up, three in a row, three up. So what's interesting is at this point, you can look back in the day and say, oh, look, there's three bullish candles, three bullish candles, three bullish candles. At what point does this clearly say it's broken? Obviously here, with five bullish candles and making a, move back up, but it makes a nice double bottom here off of very small indecision candle. And then at one point it looked like it was going to break lower here, bearish, and actually makes a bullish engulfing, but definitely making a double bottom. If we look at the calls, you could have been buying the 1925 call for about $10 right in here, but there really wouldn't have been much signal to buy on that bearish candle because, if you did it after the three bullish candles, you would have been buying here. That wouldn't have worked. After three bullish candles, would have been buying here. That wouldn't have worked. So here we'll jump over. This is the 1925 call expiring this week. Here's the 10 by 9, and it was really into this candle that you could have been buying by at 10, but then the very next candle, it ran back up and people were buying. The low here is 10.25. Now somebody, may have been reacting and got an order in and just did a market order. It's possible you could have been filled at $10 and just nobody was doing it. But at this point, and you bought at 10, it was available here to do so. It could have had a nice run up if you just held it back up all the way into 1925 here. Would have gone from 10 up to about 16 or maybe 15 where you'd be exiting. So that's 5 hours of the day. Then it gets really sideways. So all this rallying, have some really nice bullish candles. This one first, this one, this one, this one. This is kind of flipped here now. So you got three bearish candles in a row, and then three bearish candles in a row here. And then we get this it starts to kind of break down, come right into 21, a little bit past it actually. We're losing that bullish momentum. And then somehow from here, it just starts to rally. Almost makes a new high of the day, pretty close. Let's see, the high here is 1934.47. The high here is 1935.71. So almost made a new high of the day. And then we come right back down and we're just sitting at 1925 the rest of the day. So there was opportunities from a double bottom being able to get in. Now, if you weren't able to get in down here, this is again the 1925. If you go further out to the 1950, you'll see that it still made a double bottom, but this was a little easier to get into and still gave you a nice gain. So this would have been a double bottom down here. You could have been setting up an order to get in 4 by 3 and held on to that. That would have run up into $6. $6 was the high right here. And, could have exited in here for $6. So from 4 to 6, that's 2 hour gain. That works. You can also go to a strike that's a little bit closer than 1950, maybe 1940. In this case, the volume is still there. The volume hasn't dropped as much. I mean, it's less. Let's see, how many? volume 50s, 40s. Okay, there's some small ones in here. There's some ones in the, most are in the double digits. A few in the single digits, but that may just be for a 5-minute point in time. Like there's 6 of them traded there. But anyway, here's your double bottom again. And on its way back up with this candle, it doesn't even get up to 6, but you could have been doing an order at 6 by 5, and playing that double bottom and just held that. And again, it ran up to the 1925 on the stock, and that was about $9 here on the 1940 call. So if you're seeing a pattern set up, and you got to be nimble, you got to be quick with this. But if you're seeing something set up and you're looking for a place to buy, it's okay for this to pull back, and then looking for any sort of rally, retracement back up to 1925, something like that, and you can check the options pretty quickly to see, okay, what's the price at, what's the spread. I don't want to risk so much. I want my risk to be $100, that kind of thing. And you can figure out which options that's going to work on, like this on a Tuesday, right at month end, and find the option that works with the volume that's there and the setup that's there. And so up here, you should have been taking profits here. There's no telling that would have run higher. We did retest back up into this user reversal with this candle pattern. That was kind of like a false breakout. And then about 45 minutes later, we have a false breakdown. So it kind of stopped out some folks going both directions, going bullish here and then going bearish here. And then just made one little more bump, and then the last hour was just flat. And you can see after hours then, after hours then we've got a bit of a bump higher, right into kind of the high range on the day. I think this was still slightly lower than the high we made today. So we'll see where it opens up, if we can get going a little more bullish. We have a hammer up here, and it's after a bearish retest gap, it definitely retested. It a retest like this, making a double top, and then a breakdown that doesn't really retest that neckline until you get here. But by then, the double top isn't really playing out over here. This is a different pattern. You actually have an inverted head and shoulders with a double top here. And then your neckline is really right about here. And that's close enough. You're within a few dollars of the low here. That this is kind of a really large inverted head and shoulders that starts to play out and then just peters out, just because it rolled back down into the 1925 price for the close. These two candles were really nice. Nice stair step here after a bearish engulfing. We can look at the puts up here, look at the puts over here. So this is at about 120. Actually, let's look at 130. And then we'll look at the puts here at about 9 o'clock, 9:10. So if we go over to the puts, this is a 1925 put. What did I say? 905, 910. The price of this, a little pricey. The range here is under $1. It's going in your direction, so that helps. So getting in like 13 by 12 potentially, but that's again taking the risk that, okay, it's going to roll over here. There really wasn't much of a signal saying it's going to roll over here. Pre-market didn't really help. We retraced, but we still held this low. So I don't know that you had a signal to get in bearish here. As this breaks down and takes out this low, even a reversal, that'd be a good signal to get in on a retracement back up into that pattern, and that would have happened here. But your first target would have been 1925 to see if we can just double bottom off of that. That didn't happen. So you can go a little further if we look at this candle. So now we're in the money quite a bit. So let's bump out on the puts we're looking at. Let's look at the 1900 puts, see what those are doing. All right, so we've got some lower wicks here. pull into 4. I don't know if those are real or not. If they were real, you could have been buying here at right around 4 and looking to get a really nice risk reward, 4x3 here. Again, I don't know if that was real. Probably not. The only other option would have been, not the only other option, but one of the other options would have been getting in, with this evening star reversal. That would have been really kind of doing like a 6x5. It's close. It looks like it would have worked if you ignore the wicks and just held on to that trade as it just continued to run. The other setup was that I think it was about 950. And here, inverted hammer. You had a hammer here. You had an inverted hammer here. You could have been buying going bearish after either one. The only issue is you've made 25 minutes of bearish candles, 5-minute candles here. So you got 5 in a row. The next one is just, it's not guaranteed in any way, but it would have been nice to have a little bit of a retracement, have this really small candle, and then be getting in here and taking it to continue lower. And that is what happened here. So that's right about this time. So this would have been a 9x8 trade, and that would have run up to, probably could have gotten out at 12, maybe 13. So getting at 9, going up to 12, that's 3R right there. Already where it's moved, bearish, and the options working, everything looks good, and you just get a quick gain and get out. Let's see, then the stair step we were talking about, that was over here about 130. So about 130, now the challenge here is that you're out of the money again. And so, this would have been buying like 5x4, and that would have only gained you about an R. So if we go back now to the 1925 and see what happened down here. So this would have been 12, maybe 11. Yeah, the low here is 1050. So this would have been a little more challenging because you would have been looking for like about this time, like maybe 12 bucks, 12 by 11. And it's possible that it worked. And then it ran from 12 to 14 or 15. So that's 3R. There's the volume on the puts here is just really dried up into the afternoon. In the morning, it was there, it was moving. And then into the afternoon, you see a lot of these, 5-minute candles that are just a little, point here saying, okay, one there, one there, one there. Who knows if it's the same person doing these? Oh, there's 2 there. That's kind of the exact price. So what's interesting is these are puts that are, they're really close to at the money. I mean, they're within about 10 bucks or about 10 bucks from at the money. And I would just expect more volume here with that kind of strike. So I don't know if people are reassessing, giving it some space, or if puts are not the right direction, because the calls here, they do have more of the volume. So this is the 1950 calls. You can see these candles are fuller candles. I mean, you have some small ones still. That one's 10 contracts. Let's look at the 1925. Okay, I have a few candles here that are just the lines, but there were a lot more of them over here in the puts than over here on the calls. So it's just interesting looking at what could represent somewhat something with the sentiment that more people are in calls. I don't know if that's a sentiment of where the market's at or just the optimism where people are still just continuing to buy calls and letting them ride, and it's been working as long as there's enough time on them. So this is this week that they're still pretty pricey, and it's got to continue to move up, which it may. We'll see how this opens up tomorrow. If we can do any sort of a retest or sideways and allow exponentials to catch up, allow anything else to set up where we're not just breaking out right at the gate. But like I said, let me see here. Oops, too far. All right, if you look at this, you have below 1925, you really have an inverted head and shoulders, retest the neckline-ish, and then rallies. If you zoom out a little bit, here you can see you have a bigger shoulder, head, shoulder, and the potential's here with a neckline that we could actually just continue running up tomorrow, possibly. So we'll see if that plays out. And then 1972.50 is the next target above. Today was like I said, a bearish candle. It's a really nice candle, nice location. If we can gap up above 1935.71, that is another bullish gap and go. And with where this is trading right here, it could totally do that. Could definitely gap up, move up, grind a little higher, and then just continue this rally up. And then I think, like I said the other day, a really good target is a new all-time high. And, it would need to happen in a week to get there. So we'll see how big, if, we get going bullish, see how big the candle we get tomorrow is bullish. If we can gap up and continue up, we'll see how large that candle is, because we've made some large candles in this area. We had a very similar price. This candle right here, bullish gap and go above it. And the range in that candle was about $50. So let's say we gap up to, let's just say 1940, and we clear it. Add $50, you're at 1990. Not that much further to go the rest of this week and into next week till we get to the 7th to contend with a new all-time high. So we shall see if we have any sort of repeating of history, like the first time we got into this range. It's a new first time, that it's been up and so strongly bullish here that it just looks like nothing's going to slow this down. So we'll be back tomorrow to see how this plays out. Hope you enjoyed this video. This is Just an AMZN. Thanks.